markets a little bit slower because of the 2 public holidays in the week, and the trends are also today trading in the red and losing a few points. Anything major we should be thinking about?
Hi, Lerato. Good afternoon. Thanks for having me. The market lost about 0.92% today, trading about 1.3 billion naira. Basically, we've seen that in the last couple of days, the market has declined. From yesterday, it has declined about 13.6%. And this is basically because fixed income at the moment is looking more attractive. We see 5-year and 10-year bonds trading with current yields around 11.14 and 11.48% respectively, while the market has done down 13.6% year to date. So basically, we see the volumes are thin on the exchange, and this is actually not unconnected with the recent affected banks and nationalization in the banking sector. The market is more skewed towards the banking sector. So most times what we see is that when there's anything particular in the banking sector, it affects the market generally. The market used to be, the banking sector used to be about 50% of the market, but recently because of the downward trend in the market and the reduction in capitalization has moved to about 30% of the NSC.
Okay, Titi, let's talk about why investors are holding back. Some would say that, you know, if the market's a little bit depressed, it should make some of the assets cheaper. Bargain hunters at least should be coming to the market, but even they are holding back.
Yeah, really, at the moment, the valuations are really very attractive, and the market looks very, very attractive to investors. But we see that most of the investors are a bit cautious, and they're holding back on their buy mandates. They're buying at cautious level, and they're not aggressive in the market. And this is basically, like I said earlier, because the fixed income market is actually looking more attractive and having higher yields at the moment. And also looking globally, we see that the global outlook, it's actually in the Europe debt crisis also is affecting the market in Nigeria.
Now, obviously, the market's been offering, you know, low returns, somewhere in the region of 3.4%. As you said, it's really a function of the banks. After September, after we see what's happening on the recapitalization front, will we see the market lifted at least to about 7%, as some experts are saying? And if so, what's it going to take to turn the market around?
Well, at the moment, we expect that seeing steady improvement in the corporate earnings would help turn around the market. We also think that the global front, if it looks, we see improvement in the global front, it would help turn around the market. We also expect that improvement in infrastructure and power sector in Nigeria will improve the market, as this will reduce the cost of production and increase profitability in the market, in companies, which will then lead to higher profitability by the corporates.
The new CEO of the stock exchange has been very busy speaking to investors, calming nerves, and also, you know, unfolding and unraveling plans for new products. One of those, for instance, is securities lending and short selling that he says will be introduced to the market, and then in the medium term, introducing hedge fund trading. Are these things going to lift the market, in your opinion?
Yeah, we think this is actually a good and a welcome development for the market. And the CEO of the exchange has actually been trying to restore investors' confidence, which is one of the major problems that we have at the moment, as the confidence has been eroded to a level in the market. And products such as short selling would help boost would help deepen the market, and then would cause for variety in the market, which we expect to have a positive impact in the market and deepen and develop the market more.
Your comments very briefly on Access Bank and Intercontinental. We're told that Access is planning to spend something like 50 billion naira for its 75% stake at Intercontinental. How's this going to help lift the capital adequacy ratios of Intercontinental, and how does it compare to what other banks are doing by way of the kinds of price tags they're attaching to new assets and rescued banks?
Yeah, we think that the merger between Access Bank and Intercontinental is actually a good one, and the economy as a whole. I mean, the combined entity will then be having about over 500 branches, which would take the company, the combined entity, to the top, one of the top African banks, and this would also help reduce costs as a matter of synergy post-merger, such that the retail part of Intercontinental will combine with the wholesale and commercial banking by Access Bank to compete effectively in the market and with other Tier 1 banks. We also expect that the combination of the two companies would help Intercontinental to meet the September 30 deadline and also safeguard the asset of the depositors in the bank.
Right.